Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives here at Schwab, and this is Getting Started with Thinkorswim. And in a market like this, I know things are volatile, but sometimes a trader still strikes on an idea and they ask themselves, ooh, I'm going to put on this strategy. I wonder what the chances are that this trade is actually going to work out. It's one of the most common questions I get. What are my odds? Well, today we're going to be talking about some tools available on the Thinkorswim desktop trading software platform that allow a trader to evaluate their chances for success or failure on a trade. It's actually probability tools that we're going to be focusing on today. So should be a really interesting discussion. Before we get into any of that, though, let me first of all say hello to everybody that's joining us out there at YouTube. Great to see everybody. Hello there, Chuck and Michael, Eva, Jerry, Will, Doug, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, enjoy the presentation, but be aware that you're invited to join us in a live discussion. This is a Wednesday series, and we kick it off promptly 2 Eastern time. If you'd like to be here in the live stream, we'd love to have you as a live attendee. Also want to let everybody know that my very good friend Kevin Horner is hanging out in the chats with us. Kevin's going to be addressing any questions that I can't get to as long as they're on topic. Kevin's there to pick up the slack for me, so thanks for being there, Kevin. Kevin and I would also like to issue an invitation to everybody watching. If you have an account with X, give us a follow on that platform. It's the best place to connect with your favorite presenters in between the live streams. So you can find Kevin there at Kevin Horner CS. You can find me on X at Cameron May CS is my handle. But let's get into this. The first thing that we always do, bear with me for just a moment. First thing that we always do, of course, is to, so please do bear these important disclosures in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk and are not suitable for all investors. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so let's set an agenda for today's discussion. As I said, very common question that I get, and bear with me for just a moment. I think we just had another hiccup in our stream. Am I? Okay. All right, but okay, so let's set an agenda for what we want to discuss today. And as I mentioned, get this very common question. I have a trade idea. What are the chances it's actually going to work? Well, there's some tools available right here on our Thinkorswim platform that might allow us to assess that. So we're going to be going through 5 or 6 different tools that might allow a trader to get a good gauge on the likelihood of success or failure with a strategy. So I want to start off with an example strategy. Then we're going to assess its probabilities using these tools. So let's go right to the Thinkorswim desktop trading software platform. And we're going to review things using Microsoft as the backdrop for today's discussion. Yeah, it's been a crazy day on the markets today, but here's what Microsoft has seen. A trader following this stock might notice that it has really taken some lumps over the last about 3 months, brought it down to a low that may be significant on a longer term chart. I'll show you in just a moment. But since we hit those lows just 48 hours ago, Microsoft has rocketed to the upside. And to a technician, maybe this is a sign that things are stabilizing, could be going higher. I don't know, we'll see. But we're going to structure a trade based on the assumption that we're likely to stay above the $345 level. That's an idea. Is it an idea with a strong probability of success? That's a good question. So here's the trade that I'm mapping out, and let's go to a longer term chart to show a little bit more of the technical logic for this scenario. You might notice as we pulled down from these recent highs, and we're really scrambling right off those lows. Those lows of 345 coincide pretty neatly with previous highs from 2023. That's how far down we've come. These highs, you can see Microsoft really just didn't manage to get above and stay above on a weekly basis that 345 level for about 6 months. That was a pretty solid price ceiling. So in addition to just a pullback, maybe our trader sees that as a likely new price floor. So here's the possible trade scenario. The example trade scenario is that our trader, going back to the 1 year chart, let me change my y-axis here a little bit. Just click that and drag it down so you can see just down below are two lines. We're going to be setting up an example bull put spread. Now, not everybody knows what a bull put spread is, so I'm going to make it simple. This is a strategy that our trader is going to employ where it does best. The way that we're going to structure it, it'll do best if it's above $340 as we approach the May expiration, May 16th. So on May 16th, the trader has a preference to be above 340. That's the bottom line. If it slips down below 330 and we reach May 16th, that's where this trade can really fail. So that's the basic premise of the trade. All we have to do with the stock up here at $382, as long as it doesn't fall, what is that, 13, 14%? This trade could do well. So let's just quickly put this trade into place. Let's go to our trade tab. We're going to go to the 16th of May, and right here are the two strikes that we're discussing, 340 and 330 on Microsoft. But before we put the trade in, I want to talk about the probabilities of these scenarios. Now, you might be looking, and I think this is the objective of just about any technically oriented trader. They might think to themselves that all of this work that they put in assessing the price levels on a chart are somehow influencing the probabilities of success or failure on the trade. Actually, mathematically, that may not be the case. But the math can bear out the more precise probabilities based on the time in the trade, volatility of the stock. Yup, volatility like we're experiencing right now can change the likelihood of success or failure. And those can all be measured and evaluated using some other tools on thinkorswim. So the first one, and I think some of you know where I'm heading with this, what's right here, actually, what can be found right here on the option chain that might help us assess the likelihood that our stock will be above $340 come the 16th of May? Well, I'm going to use one of the columns here. Right now, our columns, our defaults are going to be the bid and the ask. Those are always displayed on our options chain. But the other ones are customizable. So I'm going to go to the top one here. This is our last price, which is basically the last trade price. I'm going to click on this, and let's go to option theoreticals, because we're talking about a theoretical scenario, the likelihood of success or failure on a trade. And I'm going to choose a Greek known as delta. Now, delta has a couple of potential uses for a trader. For example, it can show the degree of leverage on an option. But we're talking about probabilities today. And what we'll notice as we look at that 340 strike is that we have a delta now. Ooh, it's getting even stronger for this trade than when I was setting up this scenario before the webcast started. But we have a delta of 17. I know it says minus 17, but for now we're going to ignore the minus, and it's just 17. What might that infer to our trader in addition to how much the option might make or lose on a $1 move on the stock? That's one use of delta. Well, this might also tell us the approximate likelihood that a specific strike price will be in the money at expiration. Now, for a put option, what that means is that's the likelihood that our stock is going to be below 340 at expiration. Looks like there's only about a 17% probability of that. And that might align with what we already thought. We might have had a number in our heads. Boy, with the stock way up here at 384 now, all we're looking for this to do is to be above 340 on May 16th. That seems like a highly probable outcome. It is. It is highly probable. Most specifically, it is about an 83% probability. There's only a 17% chance that we're below 340. There is, reversing that number, an 83% probability that we're above 340. And so a trader putting on this trade is looking at an extremely high probability scenario. Now, before we get all excited, if the trader is considering this, there is a sort of teeter-totter effect with options trading. The higher the probability on the trade, the lower the reward scenario on the trade. So there is a trade-off there. But let's look at the other side of the equation here. Using our new friend delta, what's the probability that the trader loses or encounters what we'd call the maximum loss on this trade? In that case, going back to our charts, that would be down here below 330 on this bull put spreads, on this bull put spread. What is the likelihood that we're somewhere down? Let me expand this down a little bit more. Somewhere down in this range, below 330. Well, our delta tells us there's about a 13% likelihood of that. So just at a glance, a trader can start to assess the probabilities. They're evaluating the probabilities of success and failure. 83% chance of maximum theoretical gain on this trade if we just put the position on and let it run. About a 13, yeah, it shifts. Notice these probabilities are changing as stock prices are changing. That's about 14%. Percentages are changing a little bit. But about a 14% chance of encountering maximum loss. So that is one tool. Now, it's sort of a multi-tool. Delta wasn't explicitly designed to gauge the probability of expiring in the money, but that is one of its commonly utilized functions. Now, there actually is another number available right here on the options chain that's explicitly designed to show the probability of being in the money. And rather cleverly, you got to hand it to somebody, it's called probability in the money. So for that one, let's come over here to our net change for the day. I'm going to switch that. Let's go to our option theoreticals in Greeks, and we're going to choose probability ITM. That's an abbreviation for in the money. And what you're going to see is that this is pretty similar to our delta. Not exactly the same. Ram saying, yeah, what about the probability ITM? Exactly right, Ram. Notice this one's already displayed in percentages, and it's intended to tell us the same thing as delta in that one interpretation of delta. So why are they different? Well, this one is sort of purpose-built. I get this question all the time when I show delta and I show probability in the money. Well, they're a little bit different. Which one's more accurate? You know what we're talking about there when we ask that question? It's a logical question. You're asking me the odds. What are the odds that the odds are correct? It's a fair question. Well, one's more aggressive, one's more conservative. This is telling us on this trade, or actually a different way to talk about that, because it depends on which way a trader is looking at this. If our trader's view is that they would prefer that the contract expire out of the money, which is what we want on this trade, this one's giving us an 82% probability. This one over here is giving us a 78% probability. In this case, this one's being a little bit more conservative, and it is probably going to be right more often. But, it's a different way to put that. I actually tried to think, how am I going to put this into words here? One is going to be right about being in the money more frequently. The other one's going to be right about being out of the money more frequently. So it really depends on which side of the coin you're looking at. And we're talking about an estimate in both cases, and they're both giving us approximations. With both of these, it could be serviceable enough to say, all right, it's looking like about 80% probability. And since we're talking about something that's not going to happen for 37 days in the future, an estimate is the best we're going to get. And for traders who trade these strategies, it can give them a good grasp. It can take us a long step toward answering this question: what are the chances for success? So this probability in the money is what it claims to be. It's an estimate of the likelihood that a specific strike price will expire in the money. In the case of a 340 put, that means there is a 21.59% chance that the stock will be below 340 at expiration. And that's calculated using historical levels of volatility on the stock, using current levels of volatility on the stock. There's an earnings announcement around the corner. That's included in the equation. So, and the number of days till expiration, in addition to other variables within the algorithm that generates this percentage. But yeah, for some traders, they may have a preference for one versus the other. For others, they might say, hey, I already have delta displayed. It's close enough. And so they might go just for the delta. Now, for other sorts of strategies, notice there's one logical step that we have to take here. If we're trying to figure out the probability of success on our bull put spread, this is showing us about a 21% chance of success. On the other hand, it's showing us about a 17% probability that we're below 330, which would mean that we encounter failure, maximum theoretical loss on this trade. So for some, instead of having to take another step and say, all right, so if it's 21% chance of being below our max gain, that must mean there's a 79% chance of being above our max gain. There's another column that can be displayed here to examine those probabilities in a different way, and that is the probability that our contract expires out of the money. In this case, we want to see the likelihood that both of these strikes expire out of the money. So what we'll do here, let's go up to our layout where it's showing the last price and the net change. I'm going to switch that. Let's customize this column. And I'm going to add to the two that we already have displayed, the probability OTM out of the money. So let's add that. I'm going to position it right next to the probability in the money, and let's save. Actually, I don't want to save as. Let's just click OK. There we go. So this probability out of the money tells us exactly what we might think it would. It's an estimate of the likelihood that a contract just expires out of the money. And with our bull put spread, that's what we want to know. So it's more direct. In the case of typically when we're selling options, we want to see the probability to expire out of the money. When we're buying options, it may be more applicable to look at the probability of expiring in the money or retaining some value. So here we can see there's about a 79% chance we expire out of the money, or a 21% chance that we expire in the money. There's about an 83% chance that we're not below 330, or a 17% chance that we are below 330 at expiration and incur the maximum loss on this example trade. So these are some they can be potentially very handy numbers to be familiar with and tools to be familiar with that we can go and retrieve very quickly right here on our option chain. And once we set up the chain this way, we don't actually need to save it for the next time we come back to use it. If the trader likes the display that they've created here, they can just leave it on and see those probabilities at all times. I would suggest, though, that delta versus probability in the money, there's, as we've already seen, a little bit of redundancy there. So maybe the trader might choose one or the other if they need to save a little space in their layout. Now, there are some shortcomings with using delta and probability in the money and probability out of the money. Actually, there's one thing I wanted to touch on. Sorry, I chuckled because I realized I just made a joke and you guys have no idea. But with some traders, they may look at their trade scenario. Okay, here's my 340, there's my 330. I now know there's about an 80% chance that if I just put this on and let it go, that the trade should work out. There's about a 13, what was it? Let's go back here. I want to make sure that I get this correct. Yeah, about 17% chance. About a 17% chance that we come down below 330 and at expiration the trade has failed. But along the way, the stock is going to be moving up and down. And one thing that I've discussed in previous webcasts is in lots of these trades, the trade will at least at one point look like it was a bad idea along the way. Let me draw a scenario here. Is it possible that our stock works its way down, starts to look like it was a bad idea, but then recovers? Yeah, that's one of the possible scenarios. Could go straight up from here. It could go sideways from here. It could go down and come back up. All of those adding up to the 80% probability of success that we've already seen. But I wonder what the likelihood is that we touch 340 or touch 330 and get nervous along the way to expiration. And that's going to take us back to our fourth probability tool. Let's add one more column. I don't want it to get too cluttered here. But let's customize our column sets one more time. We're going to go back to this keyword probability. And I want to discuss the probability of touching. Let's add that to our display. Click OK. And what we're seeing here is a very different number. As comforting as it may have been that there's only a 16% probability that we're below 330, there's an 83% probability or 84% probability that we're above our maximum loss come expiration. What does this number mean? Well, this tells us, in this case, there's about a 32% chance that somewhere, sometime between right now and the 16th of May, our stock has taken a bit of a dive and it's come down and touched the 330 level. There's also about a 40% chance that our stock has dipped down far enough to come down and make us really nervous getting down to our 340 strike price. So if our trader has a plan in mind, if this even touches my spread, I'm going to stick with this trade as long as it's up here. But if it even comes down here and so much as touches 340, I'm pulling the plug on this. Well, guess what? There's about a 40% chance that that trade ends just that way. And at that point, it's quite likely that we might be exiting with a loss. So we might be taking this highly probable trade scenario of 80% chance of maximum gain and turning it into a 40% chance that we incur somewhat of a loss. So this probability of touching can be a powerful number. So I did want to introduce that tool, but there's another tool that addresses these inherent shortcomings that I mentioned a little bit earlier. With each of these columns, you'll notice they aren't terribly precise. It depends on the option chain that we're looking at and what the strike increments are, but really we're just getting numbers at sort of conveniently round numbers. 340, 345. It's not telling us, hey, I wonder what the likelihood is that we wind up somewhere in between 335. What if, or 340 and 330? What if we wind up at 335 or 336 or 337 or 337 and 45 cents? There's a sort of lack of precision. They're adequate, maybe serviceable, but there is a powerful probability tool available on Thinkorswim. And we're going to use that. It's on the Analyze tab, and it's known as the Risk Profile. Now, to use this tool, what we're going to do is actually build this trade that we've been discussing. So we've been looking at the 340 and the 330 put vertical spread. So I'm going to go to, I'm going to go up here where it says spread single. And by the way, notice I've gone to Analyze, and I'm going to add a simulated trade. What this is doing is it's going to allow us to build a trade and then look at its probabilities before we submit the trade. Okay? So we're going to go to Add Simulated Trade, and this option chain works just like it would on the Trade tab. And as a matter of fact, I could do a very similar thing just right from the Trade tab, but I like to introduce new tools when there's an opportunity. But we're going to go down to the 16th of May, and right up here where it says Spread Single, this is showing me right now all the single or the individual strikes. I'm going to change that. And since these two strikes that we've selected are actually two strike increments apart. Notice right here, we have 340, skipping 335, and then 330. So 330 and 340 are two positions apart. I'm going to go down to deep and wide and go to 1 month, 2 strike. Both contracts are in the same month, but they're 2 strikes apart. And I'm going to choose vertical there. And that's going to pair up the 330 with the 340. And I'm going to come over to the put side of things and click on that, just like I would on the Trade tab, to create a put spread down below. Now, if you're not able to see that quite a bit, let me just drag up that margin. There's our trade that we were discussing. All right, so for those of us who are familiar with these credit spreads, we know if we collect $1.20 on a 340 credit on a $10 spread, we know that the preference here is to be above 340, and if we're above that level, we're in position for a maximum gain. It leaves about $8.80 of risk, And what I want to do from here, since trades, we can go to the risk profile, and I think we just lost this again. Do you? Okay. All right. Okay, but let's go to the risk profile tool. And this is it's a more visual representation of the probabilities of profit or loss on our trade scenario. And so if you're not familiar with this tool, I want to acquaint you very quickly. It's sort of a grid chart. It shows us on the left column the potential for profit or loss in dollars, and then across the bottom are potential price levels. Now, right in the middle is something we call a price slice, this dashed vertical line. This shows us right where the stock is at this moment, 385.54. And then finally, we have these other two lines. We have a sort of a gold colored line, and then we have this blue line. I want to focus on just the gold colored line because what that is showing us is the profit or loss at expiration, the potential for this trade. Now, I'm going to make a couple of adjustments to our chart here because we've positioned a trade that is way below the current price. That's why we have, here's our current price, way over here to the left, at a much lower price, 330 and 340. That's our profit and loss scenario for our trade. So the first thing that I'm going to do is sort of click on the chart and drag this a little bit. So now we can see the profit and loss scenario for our trade a little more precisely. But just to discuss that, this gold line tops out, if you'll notice, right up here at $120, intersecting with our profit and loss potential. Down at the bottom, it bottoms out at $880. And you'll notice if we intersect with the prices, we hit our maximum gain on this trade at and above $340. We hit our maximum loss at or below $330. So all of those are just sort of a description of how the trade might play out. But what our trader might be interested in is what are the probabilities of accomplishing any of those? Well, the first thing that I'm going to do, let's borrow one of these what are called the slices again. And these are actually customizable. We can click and drag those. I'm going to click and drag that over to 330. And then I'm going to make an adjustment right up here. Notice, remember again, this is a 16th of May contract. I'm going to switch my calendar up in the upper right to the 16th of May. Now what that does is it calculates some automatic probabilities for us displayed as numbers right at the top of the chart. And we're slicing our chart into sort of quadrants to show what are the probabilities of our stock landing at or above a certain price, at or below a certain price. And now I can look up here at the upper left, and it says 19.46%. What this is specifically telling me is there's about a 19% chance, and that should sound pretty familiar, of our stock landing below 330 on the 16th of May. Well, I wonder what the probability is that we land at or above 340. Let's use this slice, click and drag that over to 340, and we now see it looks like 48%. Oh, well, not quite. That's a 48% or 49% chance that we land somewhere between 49 and $422.75. Let me compress my scale here a little bit more. And I'm going to borrow this third line and drag it over and position it right at this red, this short red line. That is our break-even point on our trade. And what we can now do is see there is a 46 or 4.66% chance that we wind up somewhere between max loss and break even. There's a 76% chance that we're actually above our max gain, and there's a tiny chance that we wind up somewhere in between. So these slices can allow us to assess very precisely levels of not just maximum gain or maximum loss, but also our break-even point. Now let's see if have I missed any questions here. I don't think so. Yeah, Dave says I was in the boondocks just temporarily. That's right, Dave. But this tool, if one gets acquainted with it, can be a powerful tool to help us evaluate the probabilities of success or failure on a trade. What I would suggest you do within Thinkorswim, get in here and experiment with repositioning things. A couple of functions to be aware of is that we can click at the bottom, drag back and forth to expand those probabilities out or contract them. Also, play with the slices. We can click and drag on those slices to see those probabilities. Hey, there's a 5.3% chance that we're somewhere between 330 and 340, 19% chance that we're below 330, 9.44 plus 66 is the total probability that we're above 340. That's how we'd interpret that. But guys, we've actually accomplished what I set out to do today. I wanted to talk about the probabilities of trades, and we've introduced ourselves really to 5 powerful tools. We have delta, probability in the money, probability out of the money, probability of touching, and then this risk profile tool, which can be a big benefit to the trader of strategies of all types. So everybody, I hope you've enjoyed this discussion. I appreciate a little bit of patience with some of the hiccups that we hit there, but we've accomplished what we set out to do. So I'm going to let you go enjoy the rest of our webcast for the rest of the day. But as you go, just remember a couple of quick reminders. Number one is that if you haven't yet subscribed to our Trader Talks channel, do that. Go right down below the video stream, click on the subscribe button. It literally only takes a second, doesn't cost anything. But our Trader Talks YouTube channel is where we house all of our previous webcasts, with rare exceptions. There are a few webcasts that don't make it onto our archives, but the vast majority are found right here on our playlists. You can also join our live streams right here. Now, another thing, help Kevin out, because he's done a great job through this webcast. Follow us on X if you have an account with X. Give Kevin a follow at Kevin Horner CS. You can follow me on X at Cameron May CS. All right. And thank you, everybody, for all the thumbs up already. Looks like we have about 100 people watching. We have, how many? 26 have already clicked that thumbs up, that like button. That's always appreciated. If you would make a habit, if you watch one of our webcasts and you enjoy what you see, if you like what you see, give us a thumbs up. It sounds like applause to the presenter. That's the function for the presenter. It also gives that presenter's webcast a boost in the YouTube algorithm, helps more people find that webcast. So everybody, thanks for giving me your time and attention today. I will be back again next Wednesday for another discussion of getting started with Thinkorswim. I have other webcasts every day of the trading week, so I'd love to see you in those webcasts. But whenever I see you again, I do want to wish you the very best of luck. Happy trading. Bye-bye.